You know what, Arnie, go back to your question. Like the Indians and Russians and Chinese could not even agree on the time zone or the language to conduct their commerce, not to mention accepting their currency.
Talking silver here with Silver Elephant and John. I did read that you have a background in capital markets. So what's your take on the current silver price? Are we going to see $30 end of this year?
Arne, I am a silver diehard silver bug. I follow my friends at David Morgan, Ted Butler. I follow silver for over 25 years. Silver is going to go past $30. $30 is the last gatekeeper before the Holy Grail turns loose. And that's why there's a very concerted, heavy-handed efforts in managing the gold and silver price. And silver is a little slightly easier to manage than gold because it's a smaller market. However, you already seen gold broken out $2,000 more than 2 times in the last couple of years. And silver once passed $28 for 10 consecutive business days. We're going to see a very spectacular fireworks like we've never seen before. Last time every time silver went over $30, it reached $50. However, the fire's been put out in the 80s and also in 2012. I do believe that given today's bullish fundamentals in inflation, in money printing, in just the loss of confidence in the governments, that this time when silver breaches $30, we can be saying goodbye to below 30 forever.
And what would be the underlying mechanics of this rise in price from 30 to way beyond that? Would it mainly be FOMO, fear of missing out? Would it be a short squeeze? What kind of underlying fundamental would retail investors be looking for?
Yes, Ryan, people say it's inflation driven, but in my point of view, I've been to 35 countries. I lived in 4 countries, 4 continents for more than 5 years. It's all to do with central bank diversifications. The dollar hegemony is broken. People used to be, US dollar used to be safe haven, United States used to be safe haven. However, the Russian oligarchs cannot store dollars anymore. They cannot visit New York anymore. And very soon the same will be spoken with the Chinese communists. So we're going to stash hundreds of trillions of dollars. Same speak with the Saudis. They don't see eye to eye with the United States anymore. And the United States is not buying the oil from Saudi Arabia anymore. So this convenient arrangement of marriage is broken down. And unfortunately, the sacrifice is going to be the dollar. And the alternative to the dollar is not the euro. It's not the Australian dollar. They're all subordinated to the fiat US dollars. So the alternative to the US dollar is going to be the hard currency, and that is going to be gold and silver. And that's why you're seeing that the liquidity is going to gold first because it's got a better liquidity. It's broken out at $2,000 more than 2 times. And the silver is going to follow. Some of the laggard in silver is not only because it's heavily managed, but it's also because the laggard in the economy, given silver is 70% industrial. So once the economy starts to reflate, you're going to see actually silver to start outperforming gold. It's always been the case. The gold to silver ratio oscillates between 30 to 100. So you hit 100 gold to silver ratio, and it's going to go back down to 30 to 40. So at a $2,000 gold, at a $40 gold to silver ratio, you'll be looking at $50 silver. I will not say it's going to happen this year, but I do think after $30 is breached, we're going to see $50 very, very quickly. And I do think we're going to have a pretty good shot at taking out 30 when September comes, which is traditionally strong precious metal season.
And just to add to that, with a practical example right now with the Russia and India trade, Russia's been selling oil to India. India's been insisting on rupees. Now all of a sudden Russian central bank is stuck with billions in Indian rupees. And what can they do? So it's definitely a challenge that both parties have to agree on some kind of currency in order to make it work. Is it going to be gold? Is it going to be silver? Is it going to be Bitcoin? We will see, but definitely a challenge for countries that don't want to deal in the US dollar and are looking for something mutual to do business together.
Absolutely. I'm in Mongolia right now. It's one of the very few countries that accept rubles, and I was just in Turkey 2 weeks ago. That's another one of the very few places that accept rubles. You know what, Arnie, go back to your question. Like the Indians and Russians and Chinese could not even agree on the time zone or the language to conduct their commerce, not to mention accepting their currency. You think that they would not be willing to accept the US dollar, but they'd be willing to accept the rubles that can print it on somebody else's backyard? It's just not a practical solution. And everybody's going to revert back to Aristotle's merits of gold and silver and realizing that that is really the only way out. And that's also going back to the 1970s when Charles de Gaulle of France, he was the one that broke the US dollar gold window because he was the one that's taking the U.S. dollars from France and then to Washington D.C. demanding the return of $35 an ounce of gold, and Nixon didn't have enough gold to pay for Charles de Gaulle of France for the whole dollar holding. That's what that broke that served that dollar link in 1972.